MITK, MITech reporting 24 cents. The estimate was 18 cents for Michael India Tango Kilo.
Oh, I want that on though. Hold on.
Shares off the highs now at $11.20. That's Michael India Tango Kilo.
Hold on, I'm busy.
TMUS Mobile announcing a 14.6.
Let me lower some stuff. We're good with streaming here? Yeah, right? I don't need that anymore. We'll leave that.
I'm going to linger, Jay.
What? I hear you.
I'm going to linger.
Oh, how'd you stay on?
You like that?
How'd you do that, though? Oh, you got Mario on Mario's side or something?
I can't tell you.
Because they shut the Zoom, right? I'm busy completely now. All right. We got Ranchero here, boys and girls. All right, let me mute some stuff. And let me mute this. What do you mean? I'm on oh, I see what you're saying. No, I'm on Twitter. Are you talking about something else? Yeah, Twitter. Oh, not in the Steam room. I got you. All right, no biggie. I'm fine though. You don't need me touching anything else. Okay, so Ron can stay. He's allowed. If he has to
Let
go,
me stay.
don't feel bad. I'll tell him. All right, that's good. All right. I think I'm all muted here, more importantly, so we don't have people scaring the shit out of us. All right, what's up, everybody? Yep, Avgo, nice reaction to earnings, raised their dividend. I didn't get to see the numbers. Ranchero, did you see the numbers at all? Was it a big beat? I didn't really see. And Costco looks good.
$1.95. They were expecting $1.87, $1.95. So they beat by 4%. Revenue $17.46 billion. The number was 18.015. That was a beat of 3%.
Yeah, Avgo is ridiculous.
EPS up 30%, 37% year over year. Revenue up 28% year over year. EPS up 15% quarter over quarter. Revenue up 13% quarter over quarter. So it was a beat, rise.
Raised the dividend. They did everything you could ask for. Costco, I see reversed. I wonder they might have mentioned something tariff related. A lot of people had eyes on that going into the quarter. So we'll see how that shakes out. Costco's been kind of quiet anyhow in digestion mode after that sick run for a good, year and a half? Yeah, year and change.
I squeezed 2 years out of it.
Yeah. And, probably setting up for another move once again in the future, I'm sure.
Yeah, if they can find some consolidation.
All right. I know it's my famous last words, but we'll kind of keep it a little brisk here. I know these things have a tendency to drag on. I like to run my mouth about nonsense for the second half of the webinar anyway. But again, I just want to touch on the Fed, get everybody caught up. We kind of much anticipated Fed meeting yesterday. Again, a quarter point cut, everybody was kind of expecting. It was more about the effects on liquidity in regards to the balance sheet and stuff like that. Again, everybody has an opinion in this space. We were talking a little bit about it at CNBC. You had people kind of analyzing it, people calling it QE, money print to go burr, the whole 9 yards. I kind of what I've done is I acknowledge this is not my area of expertise. And as I mentioned to you guys, I follow a couple of people in the space who I've been following over the years, and I know they're pretty good at what they do and solely what they do. So I kind of digress and lean to their interpretation of it all. So we'll touch on that because I think it's important, and I think it kind of lines up. Again, if you go back, and I think it all stems back to where we had that mini spec bubble, and a lot of these niche theme plays kind of blow off. That really set up things nicely to work out a certain way, not just into the end of the year, but to possibly carry on into at least I would say the first quarter of next year. Now, and there'll be fits and starts along the ways, right? There'll be days where everybody is going to think, oh, the AI trade's back on. We got to buy AI and nothing else. But I think the risk, again, and we've been talking about this for a while, the big risk is on the right tail of this market, not the left that people are worried about in regards to AI blowing up. More in the right tail of a true bull market as we get into 2026, right? More of now people are starting to get bullish and positioning and start to position bullish for things that may benefit off the economy, stimulus, economic growth, a more accommodative Fed, okay? Because up until this point, as silly as this market's been, especially in tech and AI, it's been more of, I think, defensive posturing than risk-on positioning in the market as a whole, right? You had this crowding into Mag 7 initially, again, because everybody was afraid to take risk. So you had that kind of everybody gravitating towards those Mag 7 names, almost as a defensive trade. Some people were calling it a bond trade, right? And outside of what we just experienced over the last, since the April lows, where you kind of had a more speculative tone to things, right? You had a lot of these zero revenue, mostly sexy story type growth stocks really take a leadership role and knock the cover off the ball, right? Outside of that, you really didn't have that risk-on appetite that you usually see in a bull market, at times, but it didn't really last. So I think we're set up for something like that into 2026. But at the same time, I think especially initially, and especially now more than ever, you got to be really careful on, how you're positioning for that, what you're focused on a day-to-day basis, because I think where a lot of people are going to fall into kind of trouble here, and this is not new, we've been talking about it, is if they continue to approach the market the same way they've been approaching the market for the past 2 years, they're probably going to miss out, at least on a big portion of the run, right? And guys, that's usually how it works anyway. It's funny because today in the background, and like Ranchero, every time I say it, puts me in my place, why I even have CNBC or Bloomberg on, and it's the truth. It's really more noise than anything else. But a lot of times I like to just have it on to hear in the contrarian in me, right? So you hear kind of this background noise, and because a lot of times what I'm getting at, when you start to hear CNBC talking about what we've been talking about for the past, since October, that's maybe where things are a little bit stretched on a shorter term time frame, and you can possibly get some rotation back in the other direction or just a breather, right? So that being said, we're going to see that. That's the inevitable. There's nowhere to avoid that. But that's where I think we can look to take advantage of those dips and the more and more names that participate, because they'll be sweeping those type of names even if the market sideways up crooked, if it's true bull market behavior, right? So again, just getting everybody caught up to date here to kind of what we've been focused on. Again, I would say since October in preparation for this. And if you want to look at charts to see what, a picture, I guess, put the words in the picture. And most of you know RSP is the equal weight S&P 500. Again, the last couple of days coming out of the Fed, especially here, you had a rip, kind of a breakout to new highs in the equal weight. And today, right, the S&P 500 felt like it did nothing. A lot of the, you had Oracle, I'm sure, weighing on things and some of these AI names. But it wouldn't shock me to see a lot more than that if this true bull market does indeed take off. Okay. And again, I want to stress this is my opinion more than any signal, right? Because I think that's important because my opinion has been wrong a lot. Okay. So I don't even trust my opinion at times. But my opinion is that the crowded part of the market, which is AI related names, right? Large cap, mega cap tech, AI related names that have been think of the favorites out there, right? The beloved names out there that people are constantly focused on a day-to-day basis. I don't think these things blow up, right? So you give you an example, like coming out of the 2000 bubble, what you had is you had a bubble pop and everything tied to that bubble blew up, right? And you ended up with crumbs when it was all said and done. I'm saying that because at the same time as that was going on, you had a bull market in many other areas underneath the hood. Where I have told you guys, for those of you who weren't around trading during 99 into 2000, while the NASDAQ bubble burst, you had kind of small caps were breaking out to new highs. The housing sector was breaking out to new highs. Cyclicals were breaking out. And you don't really hear that part of it. Right? You only hear about the NASDAQ bubble bursting because everybody was trying to pick bottoms in the NASDAQ names and got buried. Okay. So again, I don't think we're at that point here. I really don't. I think the risk is more of underperformance as a whole. And I think on a case-by-case basis, you run the risk that you run into something like an Oracle. Right, where they sniff out some overspending or a company misses earnings, and on a name-by-name basis, there can be pain there. Right? I mean, I'm stating the obvious, but as a whole, I don't even think this AI bubble is as big, or even if it's technically in a bubble, as many say. But that's a whole other story. I just don't think we're there yet. So I can foresee something again, and I'm painting it out like if it would work the perfect way, and it rarely does, but something where you get kind of this cyclical leadership. I think 2026 is the year for it, especially first half, right? And then kind of when we run into these everything rallies where everything gets overextended, you're going to run into, I think, corrections more than bubbles popping. But I think this is the healthiest thing that can occur, the most constructive thing. As you guys know, we've been talking about that. The turnout from this point, I think this is the only way for kind of the bull market to continue, in my opinion. This has to happen. Without it, you have overcrowded AI names where they're coming out of these names at the same time, and money's not rotating into anything else. And that's a recipe for a disaster. So I think this is best case scenario if you're a bull at heart. But again, you got to be careful on what you're buying, especially where you're buying certain names that have been in the leadership role up to now, right? And it's funny because if you ask around, and I'm sure many of you probably, not willingly, but got stuck in a lot of these names and areas. If you ask around, I've been talking to more people that have lost money over the last month and a half. And I'm talking about crying the blues, losing money that you would think NASDAQ 2000 already happened. All kidding aside. Like whether they own Bitcoin or they own, these Mag 7 names, or they got caught in an Oracle, or they got caught in some of these more speculative theme plays, right? these data center plays that are 50% off the highs. There's a lot of pain out there in these crowded areas. So I think that's a good thing. I think that's a really, again, not for their sake, but I think overall for the market, that we already saw a good amount of pain and shake out of these areas, I think is good. I just think they probably need some more time just digesting. And I mean, here, right? And Rancher and I talk about this all the time, because again, this is normal market behavior. When you get things like AI, which people get extremely excited about, things overshoot and things get overowned, right? But stocks coming off strong runs, especially multi-year runs, they go into consolidation. They go into whether it's range-bound price action for 6 months, 9 months, or sometimes you get more violent corrections, and that can fast forward the timeline a little bit. But it's totally normal. I mean, Costco, and again, if you were in the stock like Rancher was, it felt like it never was going to end. It felt like Costco could never go down, right? And it's always funny how you see the pictures of all the reasons why to be bullish towards the tailor end. Like you saw, they were opening up these Costcos in China, and there was lines all over the place. They couldn't get in a Costco. How could the run never come to an end with things like this just taking off? But it was already in the stock, right? So even on a bullish case scenario, you just get some digestion. And that's what I think Costco is kind of going through right now. And look, again, it's nothing new, right? Nothing new. You had a sick run here, right? Coming out of the 2021 low over here, looks like in March, topped out. This is where actually, I think if I'm not mistaken, Ranchero pulled the trigger into this consolidation, right, Ranchero?
Yes, correct. Yeah, around 500.
Yeah, so right over here. So you had this big move coming off the 2021 low, topped out, right, in 2022, sick run, and then just had to pay the price for it. And this is what you got. So this is ultimately, again, and it's more opinion just based on my experience and watching price action, this is what I think the risk is in a lot of the names most of you focus on a day-to-day basis. This. Okay, so again, it doesn't make it easier though, right? We would like crash and burn, because what it does is it fast forwards the timeline. Eventually, everybody gets shaken out. You find a bottom. There are no more sellers, and that's a great floor to kind of build off. Okay, but the market doesn't always give you what you want. And if you don't get kind of that violent drawdown in a sense, or crash, right, you get more of this. And you get kind of this range-bound action that will mislead a lot of people thinking that, the trading environment is just the same as it was 6 months ago or a year ago, right? If you were buying Costco here, looking for more of this, you obviously wouldn't be too happy at the end of that, okay? So again, it's more, in my opinion, of time, but I think there's enough damage on a lot of these names, and you got 50% off the highs, 60%, especially in some of the growthier names, in where possibly they can shorten the timeline a bit. But we'll see, right? We'll see. What I like to look for, one of the things is I like to see the flow go completely dead, right? So we're not seeing that right now. You see Oracle seeing call sweepers every day. You see Meta seeing call sweepers every day, right? NVIDIA, they're not going to lose interest that quick. So it takes time, right? And here's another example. Okay. Now this was even more, I think, extravagant. Ooh. But you had Tesla, and again, they're not all the same, but just so you get the general premise, Tesla had this ridiculous move, right? A couple times here, and you just get some of this before it sets up again, all right? But the point I'm making with Tesla especially is you reach a point, and what this circle here is showing is that at that point nobody wanted to play Tesla. It was an impossible trade. there were more put sweepers than call sweepers, if you could believe it, on a day-to-day basis. And the flow was actually quiet. There were hardly any sweepers because nobody wanted to play it. So you get to that point, and that's usually a good sign where if aggressive buying does show up, you can start looking for entries again. So again, that's usually what I like to look for. A lot evolves around the sweeper activity for me, but just kind of sharing my thoughts because they get the question like, when would I think it's over? Like I have some crystal ball. There's no way to know ahead of time, right? It's kind of a wait and see. And as the price action, as sellers dry up, as the flow starts to look more bullish, if they're coming out kind of a dry period, that's usually some of the earlier signs. All right. So what are they buying? And again, we've been spending a lot of time on this the last few weeks. This type of rotation or this cyclical-led bull market, especially initially, is not the sexiest type of bull market to own names in for most of the way you guys trade, right? You guys are used to trading options in an Avgo or NVIDIA where you can possibly double, triple your money in 2 days, in a day, right? You're not likely to get that, especially initially with cyclicals. Again, you talk about like one of the pure cyclicals, usually one of the earlier ones to move. Freeport, FCX, this thing will make you nauseous by the time you end up making money in it, all right? It's like 3 steps forward, 2 steps back type of thing, okay? And then eventually, as this bull market starts to spread its wings and broaden out, that's when you'll get this type of price action start to show up in Freeport. That's when it gets easier because now nobody wants to sell anymore, right? There are probably not even many sellers left. Everybody who sold as the stock is going higher is selling now on every pop, okay? So eventually you clear that, and these names really start to pick them up and put them down as the rally broadens out. But initially, these are the type of names that start to get the attention, right? So we started to see already Freeport. Many of you in the Steam Room have played it, traded it. I think you're still holding it, but we saw some decent flow there. Alcoa, right? Another pure cyclical name. You could see it kind of heating up here over the past month and a half. Small caps, right? And I think this is the most interesting part of it because people think small caps, and after what we just came out of, they think small cap growth and speculative, right? But that's not what we're going to see or what we've been seeing of recent drive the small caps. It's the cyclical value part of what makes up the Russell 2000 that's been driving the recent gains. Think regional banks, right? So along that area, financials in general, some materials and energy names, okay? So they're not the sexy story, zero revenue, but a sexy story type cheaply priced stock that we've been playing over the past few months, okay? It's more of fundamentally sound names you probably heard of and have been around a while, but just there was no reason to own them for a long time that are starting to get attention. And what's interesting to me, and I'm being dead honest with you guys, because we've been talking about the small caps for quite a while now. I initially bought the small caps, okay, and wanting to hold on to IWM exposure longer term, like many of you are aware of. Initially, why I wanted to hold on to it longer term was because of the cyclical part, right? Because if the cyclicals caught fire, if that bull market started to take off, that's where I felt there would be huge upside. What happened, though, initially was the speculative parts of the small cap and micro cap, right, market heated up. Right? So while the cyclicals weren't doing much for, let's say, what was it, coming out of the summer, basically, right? August, September, it was, right, the BEs of the world, these guys, right? All these type of names. That's what was basically driving the IWM move. So I was fortunate enough to be able to take advantage of that, aside from the names being in IWM. But what I'm getting at is the reason why I was bullish longer term on IWM was not that part. It's the part we're seeing right now that I think has a decent amount of legs. That honestly, it's just getting started. Right? It's just getting started. And again, you see the leadership there, right? IWM breaking out to new highs, outperforming the market, especially post-Fed here. But again, I think it's important for you guys to understand that if this goes as planned, it's not going to be led by those same speculative names, small cap names. You understand? You may see those names while IWM is higher, you may see them underperform and do nothing very easily. It's going to be the more cyclical parts, the makeup of that index that drives it higher. Okay? So why I may come across too wonky, like, listen, I get it, right? I've been in the game. I know what most of you guys want to hear. Stonks up or stonks down. Yeah, we all would like it that easy. But you could see how if you're not paying attention to this type of stuff in these type of environments where it can be rather costly. Okay? I would rather it be black or white, right? In most bull markets, it's usually, at least, especially the first part of it, that you can buy whatever because it's a huge tailwind at your back. You got to understand, we've been going higher for a while now, right? I think we are fortunate that we have such a large part of the market that really hasn't participated at all, that can kind of take the baton here and get running, right? So again, that's been my focus. The way I've been playing it, and I've shared with you guys, I don't want to jump into names too aggressively off the bat. Okay. So in other words, I don't want to buy Freeport, Alcoa, Nucor. It's not my game. That's not my game, right? You guys know by now the type of names I like to get aggressive in, right? Where I make nice hits, it's usually the underbelly of the market. So knowing that, at least initially, it's going to be these less sexy names that lead us in this department. What I've done is I've stuck with the IWM exposure, right? I've added some TNA alongside of that, and I started already with Nail, the housing ETF, the levered ETF. I don't mind putting on some ETF exposure initially if I can't find names that I'm crazy about on a longer term basis. Okay. So as of right now, I got some TNA. I have some IWM exposure. As you guys know, I was in March. I'm in the process of moving that out to May. I started that already to give myself more time and roll up. I own Nail. I think I spoke to you guys about that. One of the equity names I played is this AAOI. Okay. I think that's a good segue. I know I'm bouncing around, but I think it's important. The type of cyclical bull market that we're talking about, tech can play a huge part in. I think that's another thing people don't realize. Okay. But it's likely going to be this part of tech, right? So XLK, right? Whatever makeup in IWM can be tech exposure. It's just like here, if you're a fund right now and you're looking to put on the trade, you would put on this trade. XLK, long XLK, short QQQ. That's kind of the pair trade. All right. So where you would see outperformance from the whole body of tech outside of the stocks that have done best and are extremely overcrowded right now. Make sense? Okay. So again, I think a lot of people don't realize that tech can play a big part in this upside, right? Value tech, cyclical tech, some of the parts of the semiconductor complex, which are more cyclical, right? And you can just look at a chart in a lot of these names and see, oh yeah, look, this stock hasn't moved at all in the past 2 years, while a name like Avgo and Nvidia have been ripping the daylights out of things. All right, so a lot of times the chart will tell you everything you need to know on a lot of these names. Okay, so XLK and tech should be a part of it. That's where probably I want to get the biggest bang for my buck in names, because they're the sexier names, right? That's where we're going to find the sexier names for the type of art style that we usually talk about on here. And again, that's to the point. AAOI, I bought some of that equity. I'm still in. And then other than that, I've just been fooling around with some stuff. I got lucky. I think many of you played it with me. That little meme stock they pumped, the next door, NXDR. Now, this has nothing to do with the whole cyclical rally we're talking about. Some aggressive sweeper activity came into basically a dollar stock, and where they were hitting it down here, I felt it was a decent risk reward, and I sold it yesterday. Actually went higher again today. But I'm fooling around with a couple of these things. But again, the bread and butter, especially going into 2026, and we've been talking about a lot on this webinar, is that whole cyclical part of the market, right? And another thing too, like where I'm most comfortable, I want to let the flow do the talking, and I do the listening. So in other words, I don't want to be jumping out of my shoes to buy certain names. I kind of want to let the action push me into names, right? If I'm feeling like I got a little FOMO because I don't have enough on, that's where I'll put some levered ETF exposure on and stuff like that, right? So to kind of soften some of that FOMO. With the names, I want to stick to some of the more quality and the more aggressive flow. And one more point to that, just in case you weren't around for the last couple of webinars, it's totally normal, okay, for names like Freeport to lead, okay, Alcoa, Nucor. Let me just rattle off a couple, so some of you guys may like these names. Steel Dynamics, got some good-looking sweeper activity, right? These are the names that get the attention at first, and then if this is a true bull market, and that's going to be an important sign to all this, right? If this is not just rotation, for a couple months, right, that we see normally, you see some rotation out of hot stuff into the neglected stuff, right, for a little amount of time. The hotter stuff cools off, they go back into the hotter stuff, right? If this is indeed different, like I'm saying it may be, what you're going to see is you're going to see the flow in these leaders spill over into new names, new leaders, right? And that's where you'll get kind of more, the action, the buying will be more broad. Oh, another name I bought a little of, I didn't buy a lot of, this one. This is my Freeport, right? This is my FCX. ERO, copper name, has been seeing some decent sweeper activity. I'm a little late here because I don't have really a pair of coconuts, and I took my time trying to buy it, but I bought a little equity today. But I think you guys know about this name, right? We talked about this name, ERO.
Hey, Jay, can I add to what you said?
Yeah, of course. Go ahead.
So, some of the things that you're talking about, also not necessarily just small cap, but for example, tech or like that AI play, there are still names that are out there that carry really good fundamentals with low multiples that everybody kind of has on their radar for a second. They pull back, everybody forgets about them, and then they go again. Look at Western Digital. Yeah.
And you know what's funny? Western Digital is a cyclical name. It just got hot without any rotation into cyclicals because of its, I guess, AI business, right? Is that what got it hot?
Yeah, and it was when they split up with SanDisk, obviously the parts were worth more than they were together, right?
Yeah. And that name, people know it now as a hot stock. That stock couldn't get out of its way, right? Up until what, a year ago, maybe? Right? Yeah, right. So that's a good point, because that's a tech name that technically is cyclical. It just, this go around started a lot earlier and caught fire, but it's not a bad name to own, especially out of favor. You can make a lot of money on them. Some of the semi names, Ronchero, that you've been looking at and you've traded AMAT. Here's a perfect example, right? Like this AMAT, which saw some insider buying and saw some flow. Ronchero traded it. Several people in the room traded it. You know, this is known kind of like that cyclical semi, right? It really, if you look at here, into 2024, the stock did nothing. People completely lost interest in this thing, right? Because the cyclical parts of the company were holding it back. Now, those can be a tailwind here. You understand? And that's where these things can really do well. And nobody owns them yet.
When
Right?
nobody owns them because everybody, to your point, wants like the hyperscaler, the sexy name. They don't realize that there's a stack, right? A chip needs to be built, and there are a lot of companies involved in building the chip, and it takes a long time for people to get away from just NVIDIA mindset to, hey, Applied Materials, Lam, etc.
Exactly.
ASML.
Exactly. So, and going back to my point, I guess that's the point I'm trying to make here is that if you're not seeing names that are being swept, because everybody wants to buy everything in a matter of days, right? If you're not seeing names that are being swept this week, cyclical names that you kind of like, be patient, wait, because they will show up. A lot of times they show up when you're not looking for it. Again, AMAT was catching sweeps after insider buying where nobody wanted it because it looked awful at the time, right? It looks completely awful. So again, keep your eyes open and be patient because these names will show up. Here's another name, and I'll be first to admit it. I'm not the biggest Intel fan. I still am not the biggest Intel fan. I think Ronchero's not crazy about Intel either.
No, I've not touched it through the whole move.
There you go. Overall, but this is a name that could benefit off the type of environment we're going into here. Okay. Again, it's more of a turnaround story. Again, no bulls. Bulls have been decimated in this thing. So, and don't get me wrong, people don't like these stocks for good reason. Okay, but these names, sometimes they turn around. The environment turns around. It improves. And when you get an environment start to turn and nobody is in these things, that's where you get these huge runs. You look back, 6 months from now and you see these crazy moves. So there are names that you guys will be more inclined to have an interest in. It's just been more of the true cyclical names here initially. I just want to rattle off a couple of the other two here. Rio, I've seen good looking flow in this name. I don't think I played it once in my career yet on Ronchero, this Rio. I just can't pull the trigger on this thing ever.
I think it's too hard. I can't trade. There's only a couple of names I can trade in energy, and Rio is just not one of them.
Yeah, this is pure cyclical. It's a commodity play, right? Just in general, a commodity name. But no matter whether I like it or Ronchero likes it, it's breaking out. Right? It broke out here. You got a name like Valet, breaking out here. Even the trainees started to move where I can't believe it. All right, so again, it's not all going to be good looking, but if you're patient, you'll find some of the more good looking stuff, names you may know about, or leaders like this ERO that I kind of put on a little bit.
Some of the junkie retail has performed well too.
Oh yeah, that's another group.
I
give people in the room credit. They've been more on it. I haven't been. That's another group, Roger. I just can't. Especially the older names, I can't buy them. I just can't buy them. But look at this. Would you believe this? This is the old coat, Ronchero.
Amazing.
DPR tapestry. Look at this thing. Okay, would you think this is going on in retail, especially here in the last few months? This is just absolute fire, right? Breaking out to new highs. This one, they caught nice in the room, caught some really nice action. This was probably one of the ugliest stocks on the board. This Warby Parker, they make eyeglasses, but some Sharpies in the room sniffed out that they may be AI related, right? And lo and behold, Google, I think, signed a deal with them. And look at this move. Insane. So,
it's like the moving deck, right? Similar type of move.
Yep. All these type of names. All right. KNX, Patrick, again, I think it was Struck and somebody else.
Trannies.
Who were in this name. They made money. I think they traded it. They're out of it. But, yes, these are names. These are all the type of names. Now, another thing, too, because I fall into this habit sometimes, so every time we hear this, like this type of thing, we have a tendency to go look at the ugliest crap out there and force it, right? Sometimes it pays not to buy the ugliest crap out there unless they're bombing it with flow, because the reason I say that is because I get a lot of questions on like a UPS, and listen, if you really, really, really like UPS, okay, this is the time to buy. Right? It hasn't been for the last few years, obviously. Maybe it breaks out here, but if you like other stuff, like you don't have to buy UPS. Nobody's forcing you to make a play on UPS because cyclicals are leading here. You get my point? Like people like to, right, Roger? You realize the same thing? Like people like to, it's almost like they want to be the one that nails the turnaround in some of these names.
That's, I think, the large majority of where the question motivation comes from is, hey, do you guys think I have the bottom picked?
Right. Exactly. So, you got to shake that feeling off because it's not worth it. It's not worth it. All right. You want to buy some UPS. You've been looking at the name on a longer term basis. You're willing to sit through pain, expect pain because you're probably going to have some pain. That's fine, but it doesn't have to be a name you go nuts in, or if you're not crazy about it, you don't even have to own it right now. There are plenty of other things to buy, plenty of other groups and things to buy. All right, let's see what some of these guys are talking about here, because I have a tendency to run my mouth and then I miss everybody's question. Let's see, that's Mario posting stuff there. KNX we spoke about. RR is ripping here. RR is a speculative name. This is a spec name. So again, this doesn't fall into the theme that I'm explaining here. This is a robotics play. NVIDIA has been hyping this name up, tweeting it out. They do $1 million in the quarter. Ranchero does more than that in 2 weeks. And it's a spec story play. Now, can it work out? Yes, of course it can. But the odds of success now compared to 3-4 months ago are drastically down in these type of names. Okay? That's a good segue to the liquidity because I think you got to understand the reason why. There are two things going on in these names. Okay? These are all names we all played and made money with, guys. Everybody played these names. Everybody. Okay? We all had a lot of fun. Everybody made a bunch of money, but the good times don't last forever. Okay? And what happens is you're coming out of a tailwind that you couldn't draw it up any better for these speculative names. Okay? You had IWM firming up. You had liquidity robust and continuing to grow. Okay? Most global liquidity indicators were printing new highs. Right? That feeds, these things feed off that. Crypto, Bitcoin, these spec names, they need liquidity, right? Because people are chasing story there. They're not chasing fundamentals. They're not valued. All these things are overvalued, even down 60% off the highs. They're still overvalued, right? The majority of these things are losing money and have no revenue, for Christ's sake. So it's all liquidity driven, all speculative driven. Okay, when that juice dries out, these things lose interest. Okay, can they go up tomorrow, the next day? Sure, but they're more inclined to see sellers as opposed to these type of runs that we've seen in these things where they just go bananas. Okay, so if you have faith in your trading skills, these things can be traded. Okay, me personally, and you guys know I'm honest with you, I don't have a lot of faith in my trading skills being able to trade these things too often when there's no tailwind. Okay, the only time I will play it is I showed you this next door. Right? You had a stock that never had a blow-off move, never went parabolic, dead wood, not a pulse. All of a sudden, some sweeper activity aggressively comes in, and me buying the stock on a risk-reward basis, if I'm buying something at $1.80, right, and it doesn't work out, and I get out at $1.60, $1.50, it's not the end of the world, right? If I get a little lucky, and for some reason it becomes a meme stock like it did on Twitter, and I can sell into that, right, and double my money or almost double my money, I'll take it. All right. Again, a lot of times that follow through doesn't come, and I get out with a break even small. Here's another one that I traded recently that didn't do anything. RCAT. Okay. Because again, this thing's down, right? A significant amount. Down here, caught a little bit of flow. I got in, I held it for a couple of days, didn't move as much as I was hoping it did, and I got out with basically a little bit of a profit. So that's the extent of me focusing much on these things, okay? Because what you'll see is a lot of times people will sit in these things hoping and praying and hoping and praying, and not only will they be in dead money, a dead position, you're missing out on a true bull market that's taking place elsewhere. Why? Why? You like that name that much? Buy a little, tuck it away, and pretend you didn't even buy it. Forget you own it. You know, it's the opportunity cost that is more of a problem than anything else. All right. So that's kind of a lot of the names we've already traded. And you guys know all these names. I don't need to repeat symbols. You guys all play the same names. We all know them. Okay. Here's what is going on in liquidity as far as I'm hearing it from sources I follow. Okay. You had the Fed yesterday. They cut a quarter. But more importantly, what they announced in regards to the unwind of QT, quantitative tightening. I don't want to get it too wonky here because a lot of people don't follow this, and I don't blame them, okay? But basically, overall liquidity, okay, has topped out and has started to leak. All right, if you've been tuning into this webinar, we've been talking about this since, I think, late October, okay? As a whole, liquidity topped out and has been leaking, slowly leaking, okay? Not a catastrophe, not a significant problem, okay, for the overall market, but it was an issue that the Fed had to do something about, otherwise could become a bigger problem, right? And that's why we saw in the market, in my opinion, that's why we had this little kind of, again, not even a pullback, but a little shake and bake here. All right. And you heard the word repo market being thrown around, stuff like that, right? Money market fund liquidity. That was the stuff showing up, showing some concern. Okay. What the Fed did yesterday alleviated that problem. Okay. So the risk, right? The main risk behind this pullback in equities on the liquidity front, yesterday the Fed took care of. It's gone. Now, that being said, okay, you can't take that information and extrapolate it into, oh, we're back to the go-go days because now liquidity is being injected like crazy and Bitcoin and spec issues are going to go bananas again, because that's not what's happening. Okay, they took care of the problem. And that's it. Okay. So what's that mean? Means that Bitcoin, these speculative names, there's no reason for them to fall out of bed anymore based on liquidity. All right. But at the same time, they're probably not going anywhere too far on the upside, barring the Fed needing to do something else. Okay. Can they rally over the next few weeks into year end? Considering that they're down so much off the high, sure. And we're kind of seeing that, right? You're seeing that in a lot of speculative names. Bitcoin put in a low, wouldn't shock me. The Bitcoin lows hold, and it's just a lot slower of a trading vehicle, at least over the next few weeks, maybe next few months. Okay. I think the benefit to what the Fed did by solving that problem and cutting a quarter is what I'm about to show you now. And hold on. Oh, I got one of the guys I follow. You guys know, I mentioned him, Howell. I think he changed the name of his company. But he's on Twitter. Many of you know. I'll show you one of his charts that illustrates what he's been talking about. All right. So this is what I think the benefit of the Fed doing what they've done here. These are financial conditions. Okay. Now, as financial conditions tighten, the market, right, starts to become under pressure, and just companies in general, they're tighter financial conditions, right? So they go through tougher times, a tougher backdrop. As you can see here, financial conditions are still extremely loose, really loose. And that should benefit economically sensitive type names, right? If you rely on the economy, if you're tied to the economy, and now kind of the liquidity problem has been taken out of play, the Fed cut a quarter, and financial conditions are even looser now, that's going to benefit cyclicals, in my opinion. And this all goes, I think, plays perfectly into that cyclical rotation, right? In where, again, it's not the speculative issues that take a leadership role because kind of liquidity has topped out, right? But financial conditions remaining loose, a lot of the more cyclical names, and that means small caps, really have a very favorable environment right now. Very favorable environment. And again, it's not even, here's the thing, right? And this is what we've been talking about in regards to the IWM trade just in general. Forget about what we're seeing now. The Fed cut a quarter, big deal. Does that really do much, right? I think the more important thing is they solved the liquidity problem. They cut a quarter, and going into 2026, Powell's not going to be around that long. And all of a sudden, you're going to have a guy that may agree with Trump's agenda a lot more. Well, surely will agree more than Powell. And now you have a more favorable Fed. And I mean, you couldn't draw up the better environment, a better backdrop for cyclicals and small caps. Okay. Here's the cherry on top. Nobody is positioned for it, right? We've talked about that. The small caps were the most shorted index on the street a month ago. Cyclicals, for good reason. Who the hell wanted to sit in anything cyclical over the last couple of years? So nobody, it's all about positioning to me. Like even Ranchero and I talked about kind of Oracle and, you know, NVIDIA, Microsoft, whether bubble, no bubble. I don't think it has anything. I think it's all positioning. I think just too many people own the stock. You know, Ranchero, I was talking to a buddy who kind of has a little hedge fund, but you know, we were talking about it a while ago. If you run a fund, right, you have to show these names eventually that you own them. You only could go so long without owning these names, correct? Like NVIDIA, Microsoft. Would you think any fund out there right now still in business doesn't have exposure to any of these names? Right? They're all in these names. And that's what kind of we're running into right now. You know, that's I think the problem in these things. So we gotta wear them out a little. We gotta wear them out. Liquidity greatly improved through May 2026. Oh, you just reminded me. Let me get Howell's chart. Let me show you that. Hold on.
So Jay, in addition to the liquidity, I think what the day to day, if I think some traders get caught in the I'm trading a longer time frame, but get caught in the trap of trying to figure out what's happening longer term in the day to day. And unless you're really paying attention to dealer positioning and gamma and really understand it, you can get shaken out of those plays that will probably work out for you by getting distracted by that other stuff. You really got to You got to look at it closely and know what it's telling you.
That's such a great point. Listen, and again, it's about understanding what you're trading, your time frame, what you're looking at. When myself, Roncho, when I'm trying to catch a trade, like a bigger thesis, bigger picture type trade, like kind of this over the last couple of months, I had to get away from the day-to-day intraday noise, because that only makes me dizzy. You understand? You see stocks go up and down each and every day for different reasons. If you put weight into all that, you could go nuts, no?
Yeah, absolutely. I mean, all you have to do is look at something like Dashlane or ASML to look at the gyrations that will shake your nerves on a day-to-day basis when your overall thesis is probably right.
Yep, exactly. So, you got to kind of like put blinkers on, right? Stick to your script and take advantage of kind of these days or weeks of shakeouts, because they're going to be there, guys. Unfortunately, yeah. And listen, if they went in a straight line, we wouldn't have much time to make money, and they would be over a lot quicker than we would like. But you're going to have, rotation. You're going to have fits and starts. You're going to have shakeouts along the way. You just got to try to put the blinkers on and pay attention to what you need to pay attention to. Now, if you're trading intraday, obviously you should be paying attention to something completely different. So just know what the hell you're trading here. Where's that chart I wanted to show you guys on the liquidity front? Hold on. This is not it, but I think this might get the point across here. Yeah, I think this is it. Hold on. This it? This is not the chart I was looking for. But anyway, so you kind of have what he was explaining here. You have this little leakage in liquidity, where again wasn't a problem, but if they didn't do anything about it and it continued, would be a problem. And now, based off what the Fed has done, Howell's estimating that this is what it translates into going into 2026. So you're getting back to kind of where you were, right? A more choppier environment. I guess that's the better way to explain it. A choppier environment for both liquidity, which usually translates for speculative assets, crypto, and small micro cap issues and stuff like that. All right. This is GLI. That's the name of his new company, GLI. Might as well give him a plug while I'm on here. But yeah. So, this is all he does. Some of you may agree with his work. Some of you may not. I've been following him over the years. I find his stuff extremely useful, considering I'm clueless when it comes to this stuff. I want to remain clueless. There's only so many things I can follow without, my ears popping off, right? Smoke coming out of them. So this guy knows what knows what he's looking at. So this is kind of what he's projecting here, right? And that's why you certainly could see. I think here's the better way to put it. In spec land, if you like Bitcoin, if you like some of these speculative names, I would look to buy pullbacks now that the Fed has taken care of the issue. I'd be careful chasing, and I look to buy pullbacks. And the reason why, again, you're getting more of a range-bound signal from liquidity. So the selling shouldn't be too drastic, right? Barring some apocalyptic news somewhere, or the rip shouldn't be too drastic. Make sense? All right. Anybody have any questions or any names before we wrap it up? The heat just turned on. I'm sweating bullets, and
I see some names that people have posted. There's
what names we're trying to see?
NVTS.
This is a little tricky. This name, because of this. You understand? The stock went from $1 to 18 in that mini spec bubble. So again, is there a chance this thing runs? Sure. Okay. I think the odds are against it for this name, but what I think is the strongest probability and possibility is you get kind of range bound chop. Okay. Now, that being said, and here's where I think the trading opportunity in these things come. Okay. How do I get rid of this? Get off here. How do I get rid of it? Oh. It's down near the lower end of the range here, right? So yeah, I'm an equity player. I look at, even when I play options, I look at it through an equity perspective, but you can make the case, right? Like, all right, I'm putting a stop here and I'm looking for a trade. I'm looking, it's $9. I'm looking for 11, 12, and I'm going to take it, right? Maybe I'll roll a piece out, leave it longer term if I like the name longer term. But I think that's kind of the perspective you got to have on this. You can't look at this stuff back here. Okay. You can't look at that and expect that to occur again. But this name, Rancho, you remember this name. Remember NVTS?
Yeah.
It's an interesting name. So if you do get consolidation, if you do get something like I explained into early next year and the flow dries up, you remember they were sweeping this thing every day. Now the flows really start to slow down. You get the flow dry up, and then all of a sudden, towards the end of this consolidation, they come after it aggressively. That's your cue, in my opinion. Do you have anything to add about this company? Because I know you looked into it a little bit.
No, you know what? I traded it a little bit, and it when it stalled, I kind of said, "All right, I'm going to leave it alone," and
Right.
I haven't been back to it since.
Yeah. Because again, they have if I think I remember what you're talking about. They have a new chip, a new AI chip. That was kind of the sexy piece of the story. But just fundamentally, two guys like, look, they do 10 million in revenue, and they're losing money. These are peanuts. Okay. Now, again, I love trading these names. Ron Terrell trolls me every day. I love these names, but you got to trade them in the right environment. Otherwise, they can be really, really tricky. This back here, right, was the right environment. Now, this is what I think you look for. Anything better than that, See how you had this run from, what is that, $1 to $6, and then you had to deal with this? That's kind of what I think is in store here. Something to that effect, if that makes sense. Carvana. Why don't you take that name on?
Oh my gosh, Carvana. I mean, what do you want to say about Carvana? That I can't tip my hat enough to the CEO when he bought back in August of, when was it?
2022.
23.
Right?
August of 23.
23, right? No, 22.
I got him marked here. What do I got this? This date I show was August
23.
10,
I think you're right.
August 10, 23.
You're
he
right.
He plowed in $116 million of his own money. The stock's trading at $472 now. The stock back then was trading at $35 a share.
This is one of the best turnaround stories in a short amount of time that I ever seen, honestly. One of the best. You're talking about a company that was rumored to go bankrupt that weekend, and now got added to the S&P 500.
Yeah.
I mean, I've never seen anything that quick in my life before.
Well, to me, it looks like they've changed. They sell cars as the front, but really what they're doing is creating horrible loans and creating a car loan bubble is what they're creating.
Christ. Like we need any other bubbles, right?
It's all subprime shit is what it is, and then they'll just keep refinancing the subprime shit. So that's what is going on.
Oh yeah, and now if they start cutting rates, that only prolongs it, right? So they can get away with it even longer.
Right. But hey, it is, to their credit, it has performed brilliantly. I hope that I'm never one of their consumers.
Yeah. I mean, as far as the stock too, up here, I don't know what you do with it. If you like it, hopefully you're in it. If not, I don't know what you do with it.
Yeah, I mean, if you're in equity, maybe a thought is you sell the equity and replace it with options, so you can take the profit off of the table and stay in the trade. If you're trying to put on a new trade here, ouch. That's like I don't know how you do that.
That's tough. Definitely tough. MSTR, I don't think there's any reason to own this stock. I'm sorry. And I've been saying this for a while. If you like Bitcoin, buy Bitcoin. Buy a Bitcoin ETF. What's the point? Like, why own MSTR? I don't get it. I just don't get it. I really don't.
I'm with you.
But Personally, I wouldn't touch it. The flow, we talk about it every day, Rancho. It's more hedging than any directional betting every day, right? So
Yes.
I have no input on it. You have anything on MSTR?
No, we're in the same boat on the commentary on MSTR.
Yeah, I don't think it's even worth looking at here. What other names here? BKV, that sounds familiar. What name is that? I think somebody was talking about that.
Somebody also asked about a cyclical ASML or ASLM. Sorry,
ASLM.
Did I get that right?
Where is he?
No, not American Silver. It was. I can't scroll back up in the chat.
Hold on, I can scroll back up. Where do you see that? You see shit that I don't even see here. Hold on.
Oh, ALSN.
Oh, I think I know that. Isn't that a car transmission company, or maybe not?
Yeah, it was mentioned in the same breath as Cummings. So.
Oh, okay. Yeah. So this is cyclical. This
Yes.
is cyclical, and you can see. Look at the crazy rip here. 2 weeks.
Yeah.
Guys, the beauty of these names, right? We're talking about like names, MSTR and the NVTS and RR and all the crap. Every single one of these names, they're real companies. They're all profitable and they all do billions of revenue. So they're all huge names. What happened is they're economically sensitive. So if there's not much growth in the economy outside of AI, there's no reason to get excited about these stocks. Now, what's happening now is people are looking ahead to 2026, thinking that rates will go lower, the economy will do better, tariffs will be less of an issue. So a lot of the things that were weighing on this cyclical trade are little by little going to dissipate and open up the room for some upside in these things. The market, they always like to, right? They price it in all early, so they get started early. But yeah, this is right there. This is right there. If you like this thing, this is right there. Again, the only thing I would share, but I'm bad at this, guys, so I take this with a grain of salt. Me personally, when this happens, I can't chase this without seeing a little breather first. But this market, sometimes the breather doesn't come, or it's not much. So I just wanted to put that. Anything you see here technically, Rancho, on this ALSN that you would look at?
No, it looks good technically. You know what I mean? It's having a breakout with follow through above areas where institutions like to get involved. So I don't have anything from a technical standpoint to say other than it's positive. 200 underneath, 50-day underneath, 20-day underneath, all curling up. Like, what's not to like about the technicals?
I mean, it looks good. Again, the only thing you can see by the red bars here, maybe a little stretch as it bumps up to here, and you get a little breather, maybe.
Yep.
Right? But other than that, this is exactly the type of name we're talking about here, though. Good shout out on this name. Allison Transmission. He was mentioning Cummins. What a beast. That's always one of the better stocks. Where is it? CMI. Ooh. Look at this move. Oh my God. Look at this move. Yep. This already is like,
Well, it's been a beast forever.
Yep. It's just a great company. Company. You see Caterpillar. Caterpillar has both AI and cyclicality to it. And that's why people are even chasing it now up here. This is ridiculous.
Yeah, you see CAT and CMI trade symbiotically often.
Yep. These are the type of names when they do go into some sort of correction and you're looking to buy one of these cyclicals, these are always the first to find buyers. Always. They're studs. What else we got here? Oh, BKV I was looking at. I wanted to see because somebody had mentioned that before too. BKV. What is this? I remember this name. Somebody mentioned. Oh, it looks like an energy related name, right? Yep. Looks like energy. Looks good though. I don't know much about it, but looks good. VFC, that's a retailer that's been seeing flow. If you're in it, I would stay in it. And you're going to have earnings coming up early next year. You may want to adjust the position ahead of that if you got profits. But again, these things have all been catching the nice bid. A lot of shorts getting squeezed in these things. I'm just bad with these retail names, guys. I'm bad. You know, I'm just not a big fan of these older retail names. But you look at the chart, some of them obviously have been a bad decision not to participate.
Yeah, I mean, some of you are very good at trading retail names. I don't trade them well.
Yeah, I'm superstitious. I never have luck in them. I don't know. It's just, some things just, right? Some certain groups, certain names, you don't feel comfortable with. What are you gonna do? Anything else? Anybody else have any interesting names to throw out there before we wrap it up? RBRK. This, as you know, I own longer term from about a year ago. This is a cybersecurity name, good looking underbelly cybersecurity name. I think it still goes higher. Just had to obviously work off the big rip. And if it could get going here, I think it has another run in it.
Somebody's asking about Solstice, SOLS.
Oh, I don't know that one. You know this one? Let's see.
This looks new.
Oh, there's an IPO.
Yeah.
IPO or a SPAC? What is it?
Not sure.
Let's see.
Shank's asking about it. Of course,
Shank loves this shit. Let me see here. Solstice Materials, Mobile Industries, companies.
Spin-off. Ooh, Shank.
Oh, spin-off. Who spun there?
DuPont.
Wow.
So this is probably one of those things where you get like a part is worth more individually than the sum.
Yeah. You saw, what was crazy, GE, what they did with that, right? Look at this.
Oh my gosh, yeah. And Illumina, look what Illumina did.
Yeah, Illumina with the spin-off.
Grail, right?
By the way, the GE spin-off, the company GEV is the best stock ever. This thing.
Yeah.
Unbelievable.
So.
Crazy. GM, I know. Insane.
That can't last.
This is another name I just can't. Every time the cyclicals rally, they buy GM, but I can't buy it. Every time I contemplate it, I'm always late and have to chase it, and I can't chase it. Even Ford has been moving, and that's a name. If I can't buy GM, I can't buy it 10 times Ford. But again, they're all doing well. Eventually, these names are going to slow down, and you're going to see the action spill over into newer names. But initially, they come after the big names. Yeah, Ford. It's been moving.
Watch out for Ford.
Ford's been moving. Did I miss anybody? All right, guys. Anybody have any last questions before we wrap it up? Yeah, AAOI. Some of us are in. Who was that? Dan. AAOI. We bought not yesterday, the day before yesterday. Today's what? Thursday, Wednesday, Tuesday. On Monday, you had ridiculous put selling in this AAOI. Did you see that, Ronchero? Or you did, right?
Yeah, I did. There were a good handful of traders in the room that got into it. I think they're still hanging around. This has been a really nice move.
Let's see, where is it here?
And the flow, Jay, really. This is one of those ones where the flow really told the story.
Yeah, definitely.
They were not messing around. The only thing I didn't like about that trade was how far out of the money
the calls were, right?
But the fact that they sold puts to buy that far out of the money, I was like, oh my God, like these guys are insane. This is like, I didn't play it because it's not my cup of tea, but this thing took off. So
this is more like my cup of tea, Shank's cup of tea.
Yes.
18,000, over 18,000 of the 2027 12.5 puts they sold to open. And then the very next day, that was this week here. Is this it? What day is this? Yeah, this is it. June 2026, 55s. Yeah, way out of the money.
See, that's somebody either who's completely insane or knows a lot of information.
Yeah, right. Again, decent size for it dollar-wise, but we like those higher delta trades a lot better. But like Arantxa was saying, in addition to the put selling, it made it pretty bullish. and you had some tack on flow as this thing's been moving. So moving nicely, looks good. Oh, let me leave on this note. I mean, this is, again, remainder of the year. We're going into the holidays, right? So we can't get too crazy here. But I think the wild card through whatever is left of the year, 2 weeks into early next year, these type names like an AAOI, the underbelly laggards, a lot of them are in that XLK tech. Think of this. Think of the COVID bull market winners. Think of the Cathy Wood days, those stocks. Those are the stocks that can really find some weird momentum and already have been over the next couple of weeks. Seasonally, it's the perfect time for them. They're heavily shorted, okay? And again, you're getting this rotation into cyclical laggards, so you'll get short covering in them with the fear of a squeeze. And we're seeing that already. This AAOI got hot. A couple other names they've been buying. We've been seeing like a Rivian see a lot of flow over the last couple of weeks. DraftKings had a little bit of flow recently here. So names like this. Again, I think it's a wild card for the next couple of weeks. If the flow is there, something for us to trade tactically over the next few weeks. Obviously, the better the spot, the better the setup. But something to keep an eye on as we get through the next couple of weeks in the holiday season, light volume, possibly find some momentum. All right. ASST. Yeah. Oh, I think he's busting my chops. Yeah, I'm done. I bought this. Okay, here, just so you guys understand. Okay, ASST. Many of you know in the steam room, we bought this thing. This was a nice winner off the pump and dump on Twitter. Okay, but again, that was in the go-go days of a backdrop. Now, look what they did to the Montero. I can't. I don't mean to laugh. Look what they did to these guys.
It's a corpse left in the sun.
Bro, you had people buying $7, $8 on this thing. It's 95 cents right now. 95 cents. I can't. And you know what's funny? I remember when I came on here and I just felt it was my duty to warn people about more so even chasing these names into that blow off top. I was getting pushback. Oh, yeah, I'm buying it at 8, but I'm going to hold it. Okay, you're going to hold it. You're down $7. $7 in a month. You're going to hold it? You feel better about that? Whatever. Good for you. But this is why it looks like this, man. Look at this. This is why it looks like this. Now, again, this is not a name I'm eyeing because it's a social media pump and dump. But if you're looking for an entry, you want to see dead heartbeat. You want to see the flow go kaput, no sweeps, nobody cares, nobody has an interest. Twitter gave up on it, everybody lost interest, and then all of a sudden we come in one day and they start aggressively sweeping like they did over here.
Well, that's to your point, Jay, what you're talking about. There are some guys out there that this is their way of trying to teach or coach people to say, listen, you find something like this that's at this price, and who knows when, if this ever does this cup and handle pattern, and you can put $100,000 into it, and you just have to be patient, and 5 years from now you'll be up $1 million. That's I just don't do that, but there are plenty of people out there that think that that's the right way to go about it. It's just I don't know that you ever see $4 again.
Yeah, it's very, very possible. I mean, look at this thing. Look. This is literally, I can't believe people even get away with it. I mean, this is a pump and dump at BS.
For sure.
Isn't it, right? It's a pump and dump. I mean, somebody came in here, was sweeping it at under $1, and all of a sudden, boom, a tidal wave of buying comes in, and then you get retail chasing at 5, 6, 7, 8, 9. I mean, it's ridiculous. It's ridiculous. But I wouldn't. I mean, even by fluke, if this thing signs a deal with Google and is trading $8, I couldn't care less. I have no interest in this. Zero.
It doesn't make any money. It's
make money. Let me see. Okay, now you got me curious here. Let's see what they look like. Okay, now you said they don't make any money. That was obvious. They don't have any revenue. Zero revenue.
There's
Zero.
nothing there.
There's nothing there. I could build a doghouse in my yard and it's equivalent to this thing. Okay?
It's a sandwich shop in Jersey.
Even less than that. Even less than that. NBIS obviously is a sexy name. You know what I mean? People love this thing. A huge amount of flow, AI, right in the thick of things, even in the technology, as opposed to the stock. I just think it has work to be done here. That's all. I think it's in that camp where you likely see digestion. But again, I want to make clear, I'm not trying to talk out of both sides of my mouth, but digestion can come in many forms. Digestion, this thing can linger at the bottom of the range. It can squeeze to the middle of the range and then come back down to the bottom of the range. That's what makes these things so tricky and difficult right now. That's it. It can do a number of things and still be just in consolidation. A good example, again, was kind of this, which was a lone wolf, right? This SMCI, crazy fundamentals, the hottest technology you could possibly find, okay? You had two big runs. The initial run was this, and then look what it did here. Okay? It topped out at the start of August, and this is what I'm describing here. Okay? It consolidated in this form here. Right? All the way till 2024. So August, 1, 2, 3, 4, 5, 6 months. And then broke out again. And major breakout, exploded, and then did it again. Now, here's the problem, right? People think this is going to happen again, right? Same type of consolidation. The news turned. You understand? When they cooked the books, they did something.
Yeah,
right?
they cooked the books.
They
Yes,
cooked the books.
they got caught.
So it fell out of bed. All right. But the point I'm trying to get across is more of this. Okay. Again, maybe not as long, but some form of digestion is the higher probability scenario for these things. Teledyne I like a lot. I know it's up.
I like Teledyne. Teledyne's technically is in a really good spot.
Let's see where it is.
The only thing working against it right now is a declining 50-day moving average, but I think they overcome that.
This is and setup wise, like cyclical, semi, you got both best of both worlds. Again, it's run a lot. It's run a lot. So, but looks good. If you're in it, I sure wouldn't sell it. That's for sure. All right, Mr. Ronchero. I'm out.
Thanks, Jay.
Out of gas. Tomorrow's Friday again. And,
Yay.
And then the weekend again. And another week down the drain. But interesting week we had with the Fed. Again, the whole rotation. It's been an interesting market. I'll see you guys next week, next Thursday, Steam Room members. We will see you mañana. Ronchero, enjoy the rest of your night.
All right, you too, buddy.
I'll see you in the morning, brother.
Hey, everyone.
Later.